All right, hello everybody. Welcome back to JC's Forex Roundup here, I suppose produced in conjunction with the Rational Investor. This is just our informal look at some of the Forex markets, some of the charts that we're looking at to ponder levels, maybe trade setups, and what are some of the happenings going on around the Forex market for the coming week. I think actually this is a great idea for us to sort of get in the habit of, so we can gauge whether even we want to participate in the coming week. And I think this week actually is really relevant in that conversation. Without further ado, we don't want these to go on too long, maybe 20 minutes tops. So we'll try and pace this relatively quickly and move through all the different markets that we're going to cover. Usually we have a regular panel. This week we have a few others, not a few others, but a few people missing. So we're just going to cover the markets as best we can. And that should be understandable through the summer months. Understand that, I joke with a lot of my people about the pros in New York. Actually, let's see if anybody in the group can answer this. Where do I say that the pros usually are after May?
On vacation.
Yeah, and particularly I used to always make reference to the Hamptons, right? So, maybe I'll just quickly start us off with US dollar, then we'll head on over to Europe. Digi's got them covered. Then we'll pop over to Matt to take a look at the Japanese yen. Then Alex is going to weigh in on Bitcoin prices being a commodity proxy, and another proxy in the commodity space, a silver market. He's very interested in that right now. Then he'll throw it back to me to take a quick boo at the Canadian dollar, which I like to do on a weekly basis. And then we'll send you guys on your way. So, first and foremost, taking a look at the US dollar, I am working actually a rather large harmonic pattern off of, the higher time frames going back into the bottom of last year. I do have downside objectives, but, nothing set in stone in the market. You never know what's going to happen on a day-to-day basis. Having said that, I did get a sell signal on the US dollar. I guess this is back the middle of April. And the market is working a bearish pattern off this harmonic up here. And you can see how that trade's progressing even now. I am interested in the fact that this might be a larger harmonic, and I've been tweeting about that as well. This would be a test of the trend line. And good old OTE RLZ is up here, 61.8 to 78.6 fib of the whole range. So really interested, and I'm actually looking for a rally, counter trend rally in the US dollar. Last week, I think the rally in the US dollar caught a lot of people off guard. I had just pointed out that, after the initial burst, the market kind of just went sideways here. And I had suggested that a break of either of these two extremes were probably going to dictate trade going forward. Late on Friday, they did go up and tag this level, but they backed off near to the end. And then, of course, my hunch is that this is sort of a little bit of bullishness in our market fear proxy. Keep in mind, U.S. dollar index is the cash proxy in the market. So if an investor's fearful, they're going to run into the U.S. dollar. And, of course, we got good old Grexit here staring us in the face. Anybody want to take the ball here? So long and short of it here, if we do continue higher, which price action on Friday kind of suggested the market wanted to, I'm actually looking for a counter trend rally up into OTE, RLZ, and that might complete a larger bearish harmonic pattern off a higher time frame. So that's kind of what I'm looking for in the US dollar index. A little bit of a rally and strength going forward. If we break back below these lows, Monday, Tuesday, all bets are off. Probably need to come back down and test these lows. So does anybody want to comment about the actual sort of news events of this past week, specifically with Grexit? Does anybody have sort of an inside beat on that? Hearing nothing, that's not a good sign.
I can't say it's an inside beat, but my sort of analysis of the situation would lead to increase in the value of the US dollar index, just as more people look for safety with the US dollar. I think that it's sort of little doubt that we're going to see. I mean, already, I believe, on Auckland, we've seen the US dollar rally against the euro. I think we'll see more of that.
All right.
I agree, and I'll add that I believe that the yen is going to be a risk-off proxy as well in this case. So I'm looking for it to go down, the USD/JPY pair to actually go down a bit during this Grexit chaos.
Oh, that's
Yeah.
interesting. And because there was quite a long period of time when the market actually, especially during the U.S. housing meltdown, the market was shifting to using the Japanese yen as the safest fear
Exactly.
asset.
I've heard other people talk about, I mean, I could be completely wrong, but I've heard other rumors, and what I'm seeing in the charts, it at least needed to go refresh. And so it seemed to match up with what I'm hearing. That's kind of how I'm thinking it's going to play, but I could be completely wrong. Just, again, just short term, short midterm or whatever. Far any longer than that, who knows?
All right. So with all that said, why don't we pop on over to Europe and Digi? Digi, of course, is our awesome British pound analyst, and man, he's a beautiful trader, and he's using these tools so beautifully. So I really want to hear what he has to say. JC's not here today, so Digi said he might even weigh in on the euro a little bit for us, but no pressure, no pressure. Digi, how's it going, and what are your thoughts?
I'm really good, thanks. Are you, 1 second. Can you guys see my screen yet?
Not yet. Let's
There we
do a
go.
screen share, and then we should be good to go.
Yeah, can you guys see now?
I saw it there momentarily. There we are.
Yep.
Yeah, there we go. So I'm just having a look on a kind of a longer term view of the pound at the moment. So it's one thing I've been studying recently is kind of ICT principles, and I kind of noticed, I mean, we talked about this range before and kind of put this together earlier this week, and it kind of looks like a market make a buy model. So we can kind of see this long period of consolidation. I think it was over around about a couple of weeks. We can see this run down to support, and what I found really interesting, this is the accumulation zone. This is actually falling within a monthly OTE. So I mean, this OTE goes back to like 2010. So I found it really interesting that this is the level that it dropped down to, and you can kind of see all the accumulation. We see this level here where there's the low risk buy, kind of buyers are getting in. I think we talked about the election being here and kind of the smart money getting involved in that. Then we had this big run up here. I think last time we talked about this area here, which was kind of a reaccumulation zone. And I think Brian mentioned there was like 3 OTEs within the OTEs. So we can clearly see the move up off of that. We're now coming into what I believe will be a distribution zone. So I expect over the long term the price to kind of go above this level here and then maybe consolidate and redistribute to people who bought here, here, and here. Now, looking at a shorter term thing, one thing I noticed this week was a divergence with the dollar. So we'd had this low here and then a higher low. With the cable, we had this high and then a higher high. Now we don't see the same on the euro. We see this high and then a lower high kind of matching with the dollar index, whereas we had this divergence on the cable. So I think over the next couple of days on the short term level, we could be looking at maybe kind of heading down slightly, maybe looking for more kind of reaccumulation in this area. The other thing I noticed this week was this candle here. In fact, let me change chart so you can see a bit clearer.
So I'm just curious, can I ask you a question?
Yeah, of course.
All right. So according to sort of your model, a divergence in the British pound versus the euro, is that inherently bullish or inherently bearish? Like, what is that telling you?
I would say it's inherently bearish at the moment. So we could be looking at, I mean, I think what you touched on with the dollar, we're kind of maybe looking at going into this reload zone here and then heading down after that. I think maybe a similar thing could happen with the pound, where we dip back into this level here, reaccumulate, and then look to redistribute later on.
It'd be interesting. You see your little double bottom on the British pound there. It'd be interesting to do a horizontal ray off of that high. And you see the previous low there. In fact, man, there's a lot of horizontal levels in there, eh? So the highest bar of the little W there in your blue box. And then do an OTE or LZ off of this entire range that we just recently had and see if those start lining up.
Oh wow! So
Isn't that sick how this stuff lines up like that?
I mean, yeah, it's crazy how these things. I mean, I'm looking at this order block here as well. So anything within this range here, ideally here would be, you know, an ideal reload zone, I think. So I think
Yeah,
over the next couple of weeks, months, this is a level I would marking up as a real bullish area.
yeah, cool. Very cool stuff. All right. Well, you had actually the British pound and the euro on there, so why not maximize your euro chart and just give us your thoughts there?
Yeah, I mean, this is my other euro chart I've been using. So
Oh, cool.
I was kind of looking over the last couple of weeks. We've had this bearish order block here. We've kind of paced into it and then rejected down here and here. We had another bearish order block put in. So over this last week, this was a real area of interest to me. Lo and behold, we kind of popped up here, and if you look on a shorter time frame, this is a trade I took this week, and I couldn't believe how nice it was because it gave me opportunity. I let me go on a 15 minutes so you can see a bit clearer. I entered here in the morning, which was basically this region here. As you can see, it's London Open. I took an OT area from here to here, and it just fell within that sweet spot so perfectly. It was a really nice trade, ended up making 60 pips. What was so nice about it, I actually got a second opportunity again in the afternoon on London close. So I kind of see, when I see these kind of moves where it's pushed down, then retraces back up into an area where you can kind of feel that there's bearish action going to happen, goes down and then goes for a reload, then I always feel that there's going to be a really big move after that. And if we kind of just look over what happened over the next couple of days, we can see, you know, it's quite a couple of hundred pips move within such a short time frame. If we're kind of looking at the week ahead, to be honest, I'm quite uncertain what's going to happen with Brexit. So I'm not really trading this at the moment. If I was to be trading, I'd be looking for short trades at the moment, and ideally I'd be looking for anything. If we were going, this would be the sort of range I would be looking at where maybe we turn from bearish into more of a bullish mode. We've got this OT from this range here to here, and we've also got this order block here. So for the time being, I would be kind of looking for short setups, but if we do reach this price here, then I'll flip around and start looking for more bullish setups.
Beautiful. Man, you're such a pro. Can I subscribe to your newsletter, please? So, JC, you just came at the last moment. Did you just did your euro?
Yeah,
Sorry,
that's good. 'Cause I'm Australian dollar.
You're going to do the Aussie today?
Yeah, I think it's at a really interesting point at the moment, so I think it's worth a look.
Okay. Well, okay. So, and nice to see you on board. That's awesome. So we just did Digi, and we were gonna pop over. Actually, this works out well. So we were gonna do Matt. You were gonna do the Japanese yen. Then maybe what we'll do is we'll head down to JC. He'll just go a little bit further south, down to Australian dollar. Then we'll zip over to Alex to take a look at the commodities, and then I'll finish off with my 2 cents on the Canadian dollar. What do you think?
Sounds
Great.
good.
Okay, so Digi, are you all done? That was a beautiful presentation.
Yeah, I'm done, thank you.
And I think really, in all honesty, you said really kind of the biggest message right at the end there. Well, not necessarily at the end, but you did I hear you correctly that, you know, through this sort of chaos in the market right now, you might just let things alone and just watch?
Yeah, I'm happy just to see it out, really.
Yeah, because I'm kind of getting that feeling too that, you know, maybe the best thing that for the public to do is just sit on the sidelines. Anyway. Okay, Matt, tell us what's going on over in Japan.
All right, let's see if I can do this.
You're now screen sharing, I think. Whoop, now you're going to infinity.
Yeah.
So you got to make. Oh, there you go. That's
All
cool.
right. I was going to start with the dollar also. been watching it, and I kind of agree with Digi. I think short term we need to clear out these stops down here before longer term going up. Even despite all the world blowing up, they'll just keep printing it, and I think we're just going to keep going up eventually. So the yen, just on short term, I was watching these levels here from a sell model approach, and kind of rode that up and had a little short position here. And as the day went down, I closed some there and got back in, and I think that was hoping that we needed to go down here on a slightly longer term before eventually continuing up. This level down here, 122.6. If we back out again, I apologize. Oh yeah, I was going to say this at the beginning for the charts. I didn't think I was going to make it to the meeting, so I did not clean these up for you guys. But to me, it's a consolidation area, or an area where they're going to clean these stops out before eventually moving up. The weekly trend to me, or the longer term trend, I've got a COT chart here that's real messy, but if you only look at the diagonal lines here, this is the COT data. This is a 3-day chart. You can see that this was a really strong bullish block down here, way down here at 80. Shorts plummeted, longs spiked, consolidated here, and to me, they're still just heavy going long. Nothing's changed, and so I'm thinking we're going to eventually go up here to like 135 again. I mean, it's been way higher than that. My midterm play is basically what's already happened. It looks like was to short down to here, and I had a position with a stop loss at break even, and if this number's to be believed, the market's going to open at my take profit. So it's done, and then I'm just going to sit the rest of this week out. Well, I'm going to buy down here, but I might let it. I have to see it react. I want to see it like actually get rejected, because we could go down to here and actually quite a bit lower. I mean, we could go to like 118 even from that monthly chart. But so I'm with you as far as this week. I want to see what actually happens, and I had this trade on only because it was at break even. So I was kind of free to see what happened, and I had a feeling it was going to at least gap lower, and then I was going to lower the stop loss and then just lock in some pips and see what happened. But that'll be sweet if it opens up at way down there at 122.6. But
all right.
So yeah, that's it.
There's your open. Are these the new candles here right now?
No, the last candle is still the one there. But the number
I show on your the right-hand side of your screen. There's two candles.
Oh wait, you're right. There they are down there. I didn't even see them.
Okay, so that was your take profit zone down in there?
Yeah, that was it. So.
Way to go! You booked your profits for the week. You're done.
Yeah, so that's that, I guess.
All right, well, good for you. Way to go. All right.
That's coming from a premise of sort of that this is going to start being a bit of a risk off. Let's see. Is the dollar open? Oh yeah, they stopped updating the DXY intraday on TradingView. So I've been using this dollar index now, U.S. dollar index. Is it open? I don't see anything.
Maybe that's just the magic of your Forex market.
I guess so. All right. Well,
all right. So why don't we keep this train moving on? JC, okay. You want to comment on what Australia looks like for us now?
Yeah, sure.
And thank you very much, Matt. Awesome presentation. Thank you. And actually, this is our host of the show. So I should just shut the hell up and let him take over now, eh?
Yeah, sorry I'm late, guys. I've really got to rethink this this timing because I'm not really a morning person, and it's 6:30. So can you guys see my screen?
Yeah.
Yeah.
Right, great. So last week, I kind of decided to take a bit of a break from fiber. The euro was, all over the shop, huge volatility, and you had the US non-farm payroll. So I was looking at the Australian dollar and noticed that, the long-term trend, as you can see from the weekly chart, is south. We've started to consolidate, quite a bit over the last few months, and we're forming what looks like a bit of a bear flag, which I'm keeping a close eye on. And at the end of previous week, not last week, the week before, I finished the week with a bit of an indecision candle. So I started to look a bit closer to see if there could be a trade setting up, and whether we were going to be looking to sort of test the higher end of the range, or back down to the bottom end of the range. And for me, really, this downward trend is going to continue until the weekly swap at 806.4 is closed above. And like everyone said, this week we could see some volatile markets, and I'd really be looking for a close above this line this week for any kind of decision to be made whether we're going to go back up. Likewise, I'll be looking for a close below this low this week before we decide that the trend's going to continue. But looking through the weekly, and I'll just say that my charts have changed quite a bit because Digi's inspired me on having much more cleaner, easy to read charts, and I've got to say it does actually does help just sort of setting the scene for the week. So looking a bit closer at the weekly, this green box down the bottom here isn't necessarily an OTE level, but it is like a supply level, a demand level, sorry, where there is a lot of demand. The market's bounced off it several times, and we are just starting to come into that level now. Like I said, I think this week's going to be volatile. We've got this area here, which also lines up nicely with the daily order block. And so if today and tomorrow wasn't such a volatile day, I'd be looking for a nice reaction off of this area here, which is good convolution between sort of this trend line, the demand area, and this order block. Would have been really sweet. But I think we're just going to have to watch and see what occurs, and see if we maybe later on in the week get anything more definitive. Sort of drilling down onto the 4 hour. This is
You
what I
got
was looking at last week.
a performance alert on your screen. High CPU usage. Sorry.
Yeah, does anyone else get that? Heaps. Right, so yeah, last week, sort of drilling down onto the 4 hour chart, you could see that this sort of weekly indecision point, that sort of doji or spinning top, whatever you want to call it, formed around here. So I was looking a bit closer and seeing whether there was any sort of trades that were setting up, and so we were sort of ranging here, and I wasn't sure whether we were going to take out this high here and head up to the top of the range, or whether we were going to fail here at this OTE level and head to the bottom of the range. And luckily enough, and caught this fail up here when the market started to sell off, and it sort of ripped it back to try and run some stops, and then failed again. So that was quite a nice trade. But leading into this week, here's that sort of area that I'm looking at, which convolutes quite nicely with a trend line, support and resistance, demand, and this order block. So we'll see.
The only comment I would have is if Matt's charts are gapping, you may actually find that this market actually gaps right through that level.
Yeah.
And kind of like what we did with our harmonics, the PRZ, right? If you get gapping action through those levels, just be careful around that, eh?
Yeah, and just one final point. Everyone's over here in Australia is talking about devaluing the dollar as much as possible, and there's talk of some sort of 60s numbers. But before we get too excited of any trend continuing, I really want to see this demand level taken out, and I want to see it tested again and then failed.
Yeah.
before considering any shorts. Because like you said, Brian, we could easily fake out down into that and then rip back up. So
Yeah. So my suggestion would be and keep your fingers crossed. We gap lower, then the market. Do you see that horizontal support and resistance line off of your old low, right?
yeah,
Maybe that would actually act as your sort of top of the range. Then the market rallies back up to fill in the gap and fails. Like I could easily see that happen.
yeah, that'd be pretty
So
sweet.
the market will gap violently here, catch all the retail people. They'll all sell at the gap lows, and then the market will spend like a week or two just grinding back up to fill in the gap to drive everybody crazy.
Yeah. So an important level here.
That's actually kind of what I'm thinking is going to happen as far as this Grexit thing. I kind of think there's a ton of news, like we were talking earlier, NFP reports, all sorts of stuff. I wouldn't be surprised at all if like the yen gaps way down, then freaking 4 days later the NFP reports come out, say something contrarian, it like shoots back up, then the market doesn't know what to do. A week from now, it's the same as ever. Absolutely nothing's happened. Grexit or not, it's back to where we are, and we just kind of keep chugging along, printing money, and going on up to the sky.
Yeah, and do you guys see the seasonality here? It's incredible because I keep warning people, right? Sell in May and walk away. The market likes to bottom the first or second week of July. They're setting it up like it's just business as usual. Nothing's different here. That's the irony of it all. All right, so let's keep moving on. Thank you, JC. That was really great stuff. We were going to pop over now to Alex taking a look at Bitcoin and silver, weren't we?
Yeah, yeah. Okay, so after the last week of silver going down at the very open on Friday to 1550, I went back to take a look at the longer term charts and I was playing around with it. This is a 3-week chart of silver, this is a 1-week chart of Bitcoin, and I was just amazed by the sort of similar market structures that both of these commodity proxies are putting in. With Bitcoin, we have this weekly double bottom that's working right here. And we see that where we just came up to right now took us to the 78.6 of the whole range of Bitstamp from $1 all the way up to $1,100. So I thought that's a really interesting level for us to be at right now.
Talk about a line in the sand.
Yeah. Same goes for silver. If we start off at the low of like the beginning, like where is it? The low of 2001 here, and we go to the top of the range, 2011, $50 silver. When in November it went down to the bottom of the in November it crashed very very briefly, but see how it just hit right on the 78.6, that whole range, and went back up again. And then so a lot of people were panicking with this Friday crash to 1550. It happened in all of like 5 or 10 minutes, but it's the kind of thing that we had to be expecting given these lows as it's trying to put in a double bottom formation here. But I had to go back to this because thinking of being a commodity bull in such uncertain times, I got to say that if you believe in the fundamentals behind Bitcoin, you believe in the fundamentals behind silver, this is an excellent time to be thinking about buying either of those. And it's really interesting now with one broker allowing you to leverage Bitcoin to bet on the price of silver, so that if silver goes up and Bitcoin goes up, they both multiply. The thing to worry about that is to really be wary. These are crazy markets, and they could be going down and testing $14, so you can't over leverage yourself. But if you anyway, I won't go too much over on that. I think we really want to see this chart change direction before we're sure that it's time for both of these commodities to be going up in price again. This is the Dow Gold Ratio, and we see it's putting on this little triple top rate here. So we could, if gold goes up and the Dow sort of stagnates a little bit, we might begin to see this drop down, and that could be a sign that the shift has taken place and it's a time to get into commodities. But until that happens, we've still got to sort of work our way through silver's range here, and now I'm going to move on to silver. And we see this is the bottom of the range. This is that, it's December 1st. It was either November 30th or December 1st where we had this long crash down. And then it worked its way all the way up to about 1850, and we can sort of see the Gann lines there. We've really been following within that narrowing range, And this latest drop down to 1550 took us all the way to the bottom of the Gann line, took us a bit below it, but something to be wary of. You know, if I start seeing markets right in their Gann line, I get worried about a big fall. So anybody who is thinking about taking out Bitcoin financial derivative leverage positions on silver, be wary. It could be coming down to here, right?
That is interesting, though. That was almost a hammer there, right off. Is that an 8-to-1 Gann line?
Yeah, this is the 8-to-1 Gann line off of that freak drop at the end of November.
Freak, quote unquote, right?
Yeah, yeah, yeah.
Yeah, that's really interesting stuff. Yeah.
Yeah, and see the top here, it also lines up with where the market just turned right around. And if I zoom in a little closer, see, here's where I first got really interested in silver, when I started to see the market really turning on these trade locations. I mean, recently, that is. I've been interested in silver for a long time, but recently trading it, when I see the market turning at these IOBs down here, and I think, well, we're right back to exploring whether or not this IOB is going to hold with the open.
Do you see the similarities between your Australian dollar and this silver chart?
Yeah.
JC was saying there's a whole bunch of institutional order blocks just below us here, so we really need to see how that plays out.
Yeah.
The long and short of it is Australian dollar, Canadian dollar, we are commodity proxies, so we should see a lot of similarities.
Yeah. Indeed. So I'm sort of like looking for reasons to buy down here. I would like to be a buyer for all the reasons stated, but it's a dangerous market out there, and it could drop down way back down to 14. So got to be wary of that. However, if it does break out of this range, the range above it is can lead us pretty high. So it might be worth the risk in some ways. Anyway,
that's why we've been talking about the January call options. I think those are kind of interesting. Anyway.
Just quickly, I'll just say one thing I wanted to mention about the Bitcoin trade. So I was watching the OK Coin daily chart here, and we had this nice head and shoulders way back, and this recent or that rally up to 1648, 1650 on OK Coin completed this head and shoulders pattern. We got these nice double bottom signals and also the daily cross right here. So that was a really good, clean looking trade. But I want to note that if we zoom in, when it did break up, it left a gap of about 4 cents at 237.88, and now we're getting this bearish harami here that's forming today. So if this bearish harami holds for the day, then I think that we're going to have to break through this gap and test down here again before we can go up any higher.
Yeah, that wouldn't surprise me. And be careful, the Japanese candlesticks is that it looks like the open of this bar was just above mom's body, eh? So that's why we came up with the name Bear Rami as opposed to Bearish Harami. You got to be careful there.
Okay, yeah, I see. Yeah, I see that little wick there.
Just a little bit higher, so as a result, like strict Japanese candlestick people, they'll get all angry at you if you call that a harami.
Yeah.
But yeah, and I kind of feel like it too. It's but at the same time, let's see what the heck happens through this Grexit.
Yeah.
This might be like you have the bull ABCD lines drawn on there.
Yeah.
I've often seen where markets, they just look like they're going to come down and stop you out, and they just boom straight up to the ABCD targets.
Yeah. So I would not be surprised either. Yeah.
It's an interesting, and then also too that high there on OK Coin there, that's actually a pretty big double bottom, a really wide double bottom. Your move back to that 230 area, I guess, is at 1440 on your chart. I can't quite tell.
Yeah, that's around 237 or so. If it comes down here and goes to the POC, then we're talking about around like this is 230 US dollars, but this gap here is 237 US dollars.
Yeah, that seems very realistic. That wouldn't shock me. So.
Yeah, but I also still am don't get me wrong, I'm a bull right now. I'm a bull that's like carefully managing the potential stop losses and risk.
All right. Matt's freaking out here. Matt, what's on your mind? What's going on, Matt?
The market's just opened.
He saw the gap, eh? All right. Okay, so I think everybody's weighed in. I see Jack, you came in a little bit late. I did just a really brief U.S. dollar overview. If you wanted to pop in here with just a couple of minutes on, what your expectations of the dollar is going forward, that would be great. What's you here with us, Jack?
No, it's okay. I actually didn't prepare anything. I just had one note regarding Grexit. Why not look into, because it looks like it's getting close to bottoming, maybe buying when everyone else is freaking out over the next week or two?
What is bottoming out?
The metals.
The metals. Yeah. Ironically enough, remember, think that July, right? What we have, especially for Wall Street, we got to get out of them thinking about second quarter and start getting to the think about third quarter. What's the third quarter going to look like? So the first 2 weeks of the new quarter, often we'll see new fund flows come into the markets. And really, I would judge what's going to happen in the third quarter based on what those 2 weeks are going to tell us. That would be if I was an investor, if I was a trader, and I was looking for hints from the market as to what to expect. Me personally, I think you're kind of best just to let everything just leave it alone. I think there's a lot of monkey games going on in the market right now. Matt pointed out that we got a world of econs coming out near the end of the week. And I wouldn't be surprised if the big boys are trying to shake out the public to try and get them to do stupid things like sell silver at the bottom of the range, sell the euro into some sort of panic dump. I wouldn't, and I think didn't we look at the British pound? If they just bring the British pound down to an acceptable level, that actually is a pretty good trade location for us to be a buyer of the British pound, right?
Yeah, for sure. I'll be
Yeah.
all over.
So I can kind of feel like the whole setup is setting itself up, and I agree with you, Jack. Just be patient, be calm, don't lose your head through all this nonsense, and we might actually be given some really good trade setups. Yeah. Okay, last thing I was going to comment. Oh, I'm sorry. Someone else want to say something?
I was just thinking, I can't wait to see the COT data. I want to see if they
Cool.
did they add longs, did they close shorts? What did they do during these gaps?
Yeah, definitely. Okay, so it's a little after 2 o'clock now anyway, so I got to be hitting the road pretty soon. I'll just weigh in with my Canadian dollar analysis. As and really, it should sort of just reiterate what what JC has been sort of suggesting. If we're looking at the Forex rate, keep in mind that the Forex rate for the Canadian dollar is the opposite to the futures market, and how we sort of Canadians value the Canadian dollar. So typically, in the futures market, it would be rising, and we would see that as a positive for the Canadian dollar. In the Forex market, it's the exact opposite. So an up market here implies U.S. dollar strength. A down market here implies Canadian dollar strength. You can see that off of the higher time frames, the Canadian dollar was under a lot of pressure as crude oil collapsed, right? We did nothing more than check our 38.2 first stop target on this recent pullback. And what I thought was really interesting is I'm still looking for further Canadian dollar strength to bring us down into this OTE-RLZ zone. But what was really interesting is this counter trend rally off of a very normal 38.2 fib tag took us right into an OTE-RLZ shorting zone. Look at that, it was textbook. If you had the cojones to put on OTE RLZ short, on the intraday charts, you probably would have given a really, really good short right in this area here. If you were just playing market structure, the sell signal came in pretty late, right? And just off of the levels that I've had here, I've drawn, and these aren't very accurate levels, as you can see. It should actually be a little bit higher there. this trade actually at one point did ultimately hit down into the OTE RLZ long zone. Would this be an acceptable profit for me? No, because really I like to train my people that we really want to be shooting for at least 2 to 1. So this would imply, this trade setup would imply further Canadian dollar strength. So it would be interesting to see what's happening here. And as I said, ultimately, I'm looking for the Canadian dollar to head back down into this zone here. And that would be like crude oil rallying to $60, $70 a barrel. Is this an acceptable trade setup for me to actually have a target that this low has to be taken out? No. I think I could have made an acceptable target, maybe OTE RLZ, right in here, but that's only a 1-to-1 risk reward, and frankly, I couldn't take the trade. So as a result, I'm sort of stuck in no man's land. There is no trade for me right at the moment on the Canadian dollar. And really, if anything, I'll be looking to short on a major rally into the higher time frame shorting zone down here, longing of this Forex pair. And really a serious test of these highs, and then maybe a nice little fail up top here if this level failed. Then I could consider going and buying the Canadian dollar. Right now, we're just sort of stuck in no man's land. If I look at the econs coming up here, nothing really dramatic coming out of Canada. We do have a GDP data on Tuesday. You can see it's a green, not a major one. You can see, and really it makes sense. We've had oil prices coming down here. So as a result, you can see Canadian GDP is trending lower here too. So that kind of supports a weaker Canadian dollar as well. Really on balance, I think the big message is what the heck's going to happen out of Europe, and what are these guys going to do? And really, to all intents and purposes, if I was, actually suggesting somebody you have to do something right now, my advice is don't do nothing. Just sit on your hands and let's see if trade setups develop in our windows here. All right, so that's basically my commentary. Are there any sort of last comments or anything anybody wants to throw out before we end today?
No, I think that's good timing.
Okay, so thank you everybody for your input. Great job, everybody showing up. I hope this information is of value to people out in the community, and I look forward to bringing you more information through JC's Forex Roundup. That's what I'm calling it now, JC, whether you like it or not. And we'll see everybody next week, and let's see how we do on our prognostications of the euro. So I'm going to say goodbye. Everybody else want to say goodbye? Now's your opportunity.
Brian, thanks for stepping in. Sorry I'm late.
That's okay, JC. It's a pleasure. I really think this is a great idea. Everybody's texting their goodbyes, so all right. Everybody have a great week. I'll post this on JC's feed shortly, and you should be able to find it in our crypto live room if you want to watch it later. So have a great day, everybody. Good luck with your trading. All the best, and bye for now.